and the CRA calls this capital cost allowance. So I'll give you an example. So we, based on different types of assets, we have like appliances. So for example, the CRA has said that appliances can only be deducted 20% of its cost every year. So year one, you do 20% of that. Year two, you do another 20%, and so on. So if it costs you $5,000, you can only deduct 1,000 a year on your investment property. It's very important to keep track of your costs. And every dollar that you deduct on this, it's a dollar taken off your income for tax purposes. So this is where it becomes important to keep track of how much you've claimed as a deduction every year to how much the current balance is. So let's go back and let's say that we had something that we bought for $60,000. And this is my example right here that I'm going to talk about. So if we bought something for $60, that's my cost. And over the years, I was able to claim my capital cost allowance, and my unclaimed portion is now only $20. So if I sell this thing for $100, there's two different components that the government looks at. One part is what we call CCA recapture. So the government says, I gave you $40 off over those years. Since you sold this thing for over $100, for over the price you bought it for, I'm going to add all of that money right back to your income. So as a result, $40 of it will be recaptured. So it's going to add $40 right into your income for that year. Because this is how much they've deducted all those years from the 60 down to 20. The second component is now that you got to your original cost, anything above that is now your capital gain. So you sold it for $100. Well, it cost you 60 to get it. So now I'm going to have $40 go on your capital gain. So in this example, when you sold that asset that you bought for $60 for $100, the government considers that not $100, but $80. 40 from the recapture and 40 from the capital gain. So now that you survived my most math-intensive slide, I'm going to talk about, and I think this is also a very important thing to consider. There is proposed changes to capital gains, and I think there's been in the news a lot about the changes, and it started around June. It became into effect June 24th, 2024. And what that rule, so I'm going to talk about the current rule, and then I'll go over the proposed changes. So in the current rule,